Well, thank you, Matthew, and thank you everybody for turning up. And I just, after speaking after Nick, I emphasise that both him, Ben, and the team, they really do a good job. So that's they're worth looking up. My name is Peter Gleeson. I'm executive chairman of the company, and with me is Heman Wong, who's CFO. He will answer a few slides. Otherwise, we brought him to Montreal for nothing. So it's who are we? BQE Water is using our portfolio of unique IP to grow recurring revenue from clean water production in the mining industry. Kind of a simple statement, but actually it's real, and it's been a seed change in the mining market in the last little while, and in fact we're establishing it. We're not new, and we're not trying to tell the world, to convince the world of something that we haven't already done. We've built 32 plants worldwide, mainly in North America. We've commercialised 4 technologies, each annually about 20 million cubes of water we discharge. We talk about 4,000 tonnes of metals, but our business has evolved that we actually give them metals back to the miners now, except in one area in China where that's still part of our revenue model. But since we've taken over, we've taken the commodity risk out of the company, and we're more in tune with getting our revenue from cubes of water treated, or actually a service fee per month. An important part, the last part there, is very important to us, is we literally look in every operation that we're at to create zero waste. That may sound simplistic, but that's not normal in the industry. When companies are trying to deal with contaminants in the mining world, they're often kicking the can down the road in some other way. Pretty much there's a couple of areas where we're only sort of 95% of the waste gone, but we aim every time to get rid of 100% of the waste, so the contaminant is gone or being used somewhere else or whatever, and I can go into that further. Our tech, and this is a recent change in our slide because of what's happening in the mining industry. If you look, and basically selenium, which is Selenex, which we actually have a patent on there, that's becoming a bigger and bigger problem regulatory around the world, and we have the only commercially available non-biological solution for dealing with selenium. To date, the only solution has been biological, but we knew it was inefficient, we knew it wasn't right, and so we've actually brought in a process, Selenex, that truly is disruptive to the industry, and it's grown in a few short years to be a third of what we do. The other area is SART, which is recycling of cyanide. That has literally in the last 2 years, that's increased dramatically because, obviously some of you will know that cyanide is used in heap leaching gold, and a lot of, with nearly $5,000 gold, there's a lot of gold production coming online now that's extremely dirty gold production. The actual clean gold production, it just isn't out there. And there's a lot of projects that were not economically viable that have suddenly become economically viable, but even so still marginable. So if you can actually, what happens is in recycling cyanide is the cyanide goes through the heap leach, it recovers the gold, but it will also pick up any other soluble metals. And if it picks up them soluble metals, it has to be destroyed. And obviously we do that as well, called detox. But we can actually recycle the cyanide, recover the soluble metals in the cyanide, and the miner gets to reuse about 85% of the cyanide. So they're not buying as much cyanide as the front end, they're not destroying as much as the back end, and they get an incremental sum from the metals recovered. And obviously the way the market is at the moment with gold prices, we're seeing a big increase in that. And about a third of our business is all the other technologies that you can think of in the mining world that deal with wastewater that are established out there. We basically like to say this, we can do what everybody else can do, but we can do a lot more. So that gives it. We also have IP in metals recovery and sulfate. Sulfate is a great thing where that came along before Heman and David took over that patent, and it's a great area where the regulations haven't come, and I'm a great believer in you don't IP something that the regulations are not there yet. They're coming, but they're not there yet. But the other three you look at are much more interesting for you guys. Water in mining, for anybody who does or doesn't understand mining, 90% of mining is done in water. And, you know, the always a secure water supply is needed. And the days of storing contaminated water are just, you know, the regulators are not having that anymore. So the idea is actually having no impact on the water. And where another thing we do, we don't use dilution. We are clean at the end of pipe. Literally, you can test our water at the end of pipe. So in the mining world now, it's becoming much more complicated. If someone's been in the mining world for 30, 40 years, they've seen the risk element of this change dramatically. If you was in the mining world in the 80s or 90s, in Canada, your bonds for your mining company may have been $5,000, $10,000 or $20,000. You have companies regularly now, 150 million, 120 million, and even like Glencore in the Elk Valley, they're like 1.5 billion, their bond. And the bonds are there so that should the mine go to clean up afterwards, if they're not there. And it's fairly normal that some of the junior producers you're looking at, their bonds will be well over 100 million. So that, you know, the decision making for the miner now, as it shows in this chart, has become a lot more complicated for the miner. You know, the Mount Polly disaster, the Eagle Mine disaster, which we're at, and I can, you know, explain that further if anybody wants to hear about it. But you know, when you talk about selenium, we all need selenium to live. But if you look at, you know, the waters coming down from the Elk Valley or anywhere else there's selenium, and it appears in all hard rock mining, it's where you're starting to see the deformities in fish or the toxicity in the water. So we don't need as much as they're producing. We need a tiny about it. But we do need mining. We do need mining in the world. So it's going to, you know, this is going to have to come on. This is an important part about BQE Water and who we are and how it works. So first off, a client would call us in, a, you know, trusted advisor to come in and deal with a technical situation. So every mine site you look at will be different. Every ore body is different. If anybody invests in mining here, you know, there's 100 reasons why a junior will fail. And often it's because of the, you know, the ore body looks exciting when someone says 3% copper or X percentage gold or whatever, but there's a lot of reasons that they're bespoke and different. And they change over time as well. Once mines get into production, the actual water that's being discharged will change because the ore body's changed. So we come in at the beginning as their technical advisors. We insist as much as we can upon operations. We look towards initially getting a 3 to 5 year contract. And then it's about making ourselves sticky, become, you know, the miners' risk mitigation, and we're the trusted water advisors. But all the time we're creating technical innovation, all the time. And we actually, shortfall, we've actually not been capturing as much, but we restructured the company last year and we now actually have a person that's just there for capturing the IP that we're not capturing. And again, going back to the earlier slide, we don't want to capture IP that has no value in the world. It's very, very important that it's IP that the miners need. So the IP we're producing, the miners are paying for. We don't pay for it ourselves. If a miner's not willing to pay for it, we're not going to work on it. So we're actually at the cusp of where they are with their trouble. So that circle and us operating allows us to improve all the time. This, again, fairly simple statistics here. It's a longer slide. All this is on our website. You can look at it. But if you look at the middle vertical, you look, there's just under 5,000 mines in production in the world. And literally half of them are in the Americas. About just under 25% in North America, and probably just over 25% in South America, Central and South America. But if it, you know, and then you look at mines in development, there's about 10 times as many mines in development. Some will get there, most will never get there, but they have to look at the environmental issues at the very beginning. Many of them will work with. And there again is about 10 times enclosure. Many of them owned by governments where people walked away, where they had them stupid bonds or whatever. And that, so all these areas we can work in. Obviously our ideal area is when they're in production, but we have to do the earlier part to get them into production. And we do our own due diligence beforehand on does the company really have potential to get there. And you know, a little bit about me, I spent 30 years doing due diligence for fund management groups in Europe, centering on mining, and I actually built a mining company in Seville in Spain and sold it out to Trafigura in 2008 there. This is a typical project revenue. So before we will ever get into operation, there will be 3 to 4 million spent on what we call technical services. So that's literally from a lab report all the way to commissioning. And along the way, you know, we'll be doing design for permitting, helping the miner with permitting, piloting if they want piloting, and then commissioning. What we don't do, there's certain parts in there that, you know, we don't risk our capital at all. It's all paid for by the miner. Everything's paid for by the miner. Then you look at operations, and this presumes that we get renewed, our contract gets renewed. Obviously, if it doesn't get renewed, it isn't as long as that. But this is presuming it gets renewed. And how we can be, you know, sort of, you know, fairly enthusiastic about what we're doing. If you look at Raglan up in northern Quebec, we get renewed every 3 years there, and we're constantly renewed. We've been there about 20 years now. In China, we've been there for 19 years and getting renewed. That does come up for renewal next year. So every site we're on, we're about proving our worth, proving how sticky we are, and continuing the operations. Our clients and footprint, you're looking at, yeah, I won't name everybody there. You guys can look at it again. You can look on our website. There's some of the strongest names in mining in the world. And we're working for them, and we're becoming trusted advisors to them in particular parts of the world. But the great thing is the mining industry is people move around a lot, and the people that move around that have worked with BQE are starting to come to us now from other companies. So that's, you know, it's just a great thing. These are some of the recent awards we've got, and every single award there, we never applied for one. Not one did we apply for. They came to us just because they discovered what we do. And the middle one is the most important one, that the METSOC Innovation and Sustainability Awards, first off, getting both of them awards at an event is unheard of, but that's the industry picking us out for our technology and what we've got. This gives you an idea of the revenue. So we, you know, sort of 2/3 of it is non-recurring, 1/3 of it is recurring. Obviously, we want to keep growing the recurring revenue. Unfortunately, not unfortunately, but fortunately, as you're seeing today, the mining market is pretty hot, and we're seeing a hell of a lot coming in at the front end. So, you know, whilst I hoped that the recurring part was going to overtake the non-recurring part by now or in the next year or so, I don't know. The commodities market is so hot that we're seeing a hell of a lot coming in the front end, and that's going to take time to develop. It's a big pipeline. It's very exciting for us, but it will be a while before the recurring revenue takes over. As you can see, though, just in recent history, these are just the contracts that we put into operations. So again, they're on our website. You know, one we announced just last week. And that's an interesting one, because we're starting to get business now from people where we haven't built the wastewater plant. We've actually been called in just because of our expertise. So we can actually go in and make it work better, cut down the OPEX costs and whatever's out there. I'm now going to give Heman, our CFO, a little chance to talk, because otherwise I'll talk forever. So that's it. There you go.
Thank you, Peter. My name is Heman Wong, CFO of BQE Water. Yeah, so I guess start with top line. Looking at our revenue, you can see on the right-hand side that we use the term recurring revenue anytime we're operating a plant, providing services on the floor, and it's a multi-year contract. Those are our recurring revenue. And you'll see two bars there. What one is actually hidden, but basically the lighter color is our proportional revenue. And that actually includes our revenue that we earn in our Chinese joint venture that we had for 20 years. That's the piece that we are recovering copper from wastewater, and that's how one of our operations. And the darker blue is our revenue that is recurring, that is from our JV. And we included in the last on the most left-hand side is our 9 months. So you can see that in our 9 months, our technical services this year, just exactly what Peter has mentioned, that our phones are ringing and there's more and more projects that we're working on. On the other side, it's a snapshot of our working capital. Again, it shows our past 5 years, including our 9 months capture in September as well for 2025. Our overall 5-year trend is we have 6 times our recurring revenue, so we can continue to build that recurring revenue model. Most of our technical services projects that we engage eventually turns to operations. It's just a matter of the when and how long, because the mining cycle is long for a miner. And yeah, 4 times the market cap, 7 times the working capital. So overall, just giving you a trajectory for the last 5 years. I guess the key thing here you guys want to know is the margin and profitability. In blue is our adjusted EBITDA to GAAP revenue. And our gross margin, we have been hovering around 50%. Again, we have 2 buckets, right? Our operation revenue, recurring revenue is a slightly higher, a bit north of 50. Our technical services, it's a bit south of 50, and the mesh of them is around 50. And our adjusted EBITDA margin, we've been floating around that 20%. And as we continue to expand, we are expecting to put another 25 to 30%. We can probably land there as we scale up. And that's also shown in our G&A to GAAP, our G&A cost to GAAP as well, that we are gaining with scale. And lastly, just to share some numbers of our compound growth in the last 5 years. And these are from 2020 to 2024. So overall, it's what we have built on in the last 5 years. So I'll hand it back to Peter.
Thank you. Thank you, Heman. This is, and you're all going to say the same question. When you look at us, you'll go, oh my God, yeah, but the liquidity. Where basically there's only 40% of our shares are free floating, but 58-60% are held by insiders, extremely long-term insiders that all believe in it. There's about 8.5% with management. None of us sell, none of us have sold. We all believe in the long game here. If you looked at us 5-6 years ago, you would have seen that a few $100 would have traded per week, and that would have been it. Obviously now we're, roughly on average about 1,000 shares a day. So we're somewhere between $70,000 and $100,000 a day. Not the greatest liquidity in the world, but it's the reality of the liquidity of our stock. I like to say that we're almost like you're buying a private company, but with all the bonuses of a public company for you, not for us. We have no need to be public, but we are public, and we're going to carry on being public. But you get quarterly reports, you get annual audits, you get all the information coming out. Anyone who is a current shareholder will tell you how responsive, certainly I am, to every shareholder that asks questions. I try to do it, but this shows that we've got the liquidity up, but it's never going to be the most liquid stock in the world. But it is what it is, and just wanted to show that we have got it up, we do work at it, and we do talk to people about it. The catalyst for a step change in valuation. Well, there's consolidation in both water and environmental services in the mining sector. And why we say that is, we talked earlier about our project pipeline, number 1 there. But there's a massive gap in this area where the giants in the water industry, the Veolias, the Suez, the Evoquas, the Xylons, whatever, the multi-billion-dollar companies, they want to build municipal plants, desalination plants, high volume of water, low margin, but lots of it. And they're really, really good at doing it. If you look at a municipal plant in Canada, it'll look the same as one in Australia or the one in England, or, you know, the size might be different, but it'll be the same. Same with desalination. But they don't like coming down into the mining area where every single wastewater plant is bespoke. And also, they can be 20 to 30 million. Veolia doesn't even want to work under 50 million. They don't even care. And there's, you know, their technologies, all them companies I mentioned will use biological. They can't get down to the levels we can get at. We can get down below 2 parts per billion. They can't even do it. We can actually get down to undetectable. So there's a multitude of companies trying to deal with niche areas under $100 million. And then there's all these companies that are $2 billion and up. And there's nobody in the $500 to $1 billion area dealing with the mining industry alone. And where I like to say we're going to eat or get eaten, but we're going to fill that gap. We're going to be part of filling that gap because of the IP we have. So we're going to carry on as if we're the ones that are going to fill that gap. And I'm not saying we are. It may be someone will take us out quicker and do it, but we certainly won't be taken out cheaply. So we're aiming to fill that gap. And, you know, the protection of value that we mentioned there in uncertain economic environment. We actually, COVID, believe it or not, told us something we didn't realise. All the sites we were working on went into care and maintenance, as we all remember what happened in COVID. The only people on the sites was us. That was it. Because they had to deal with the wastewater. They couldn't stop it. So it actually gave us an indication that even in uncertain times, BQE still had a value. You know, protection of value basis. Obviously, you guys look at a lot of small cap companies and that, and we like to feel that we are a little bit different. You know, we've proven commercial strategy. The customers have bought into it. The people believe in it. Risk mitigation, and that the unique disruptive technologies proven on an industrial scale. This is not bench scale. They're commercial. They're out there. They're working. Obviously, the percentage of revenue is recurring. You know about. We do everything in-house. Our lab is in our office in Vancouver. It literally is there. So everything, you know, we have water come from sites from all around the world, looking at things, looking at problems, improving things, and that. And we just recently, we did our first M&A last year in July, where we brought on aquatic toxicity. Again, I'm probably running over time, but I can explain that if you want. Afterwards, and our business is aligned with 21st century values, you know, and priorities. It really is. Water, you know, but even if you love a green economy, you're gonna need metals, but it's gonna have to be done in a socially acceptable way. So, oh, sorry, I did that again. Sorry, where is he? Yeah, one more. As you can see, I'm not in charge of technology, so fat fingers. Sorry. No. All right. This is one that I like to say of my 30 years of doing due diligence. It didn't matter what company I was looking at. The old adage of management, management, management. When you're looking at companies, you can have the best products in the world. If you have bad management, guess what's going to happen? And you can have a mediocre product and it can take over the market if you have great management. And our management, you know, which I'm a part of, Heman's a part of, and that, you know, we've proved what we can do. The technology is proven. The ability to execute is proven. Customer retention, as we mentioned, you know, we've been at Jiangxin Copper for 19 years and Raglan Mine for 21 years. Okay, they were before our time, but we get renewed at Raglan, as we said, every 3 years, and we've done that. Major due diligence done by industry leaders, not, you know, guys that know this business better than anyone else in this room have done the due diligence on us. Cash in the bank, we need to update that, Heman. We've got more money than that now, but that's an omission by us, guys. I think our 9-month figure last year was 17 million or something. Yeah, so no cash, we don't need cash. We're creating cash and we don't risk cash. We don't. Market readiness for offering. I think that's proven. New IP and substantial potential. As I alluded to earlier, we was letting a lot of IP, we weren't capturing it. We now have a person dedicated to capturing IP. It won't be that we're going to have a ton of IP. If we have a industry needed IP in the next 2 to 3 years, just one, that will be enough. Something that's equivalent to Selenex, that can be a truly disruptive technology to the market. But we're not sitting on our hands waiting for that to do it. Partnership with Indigenous group, really, really important to us. Everybody says it now because they think it's fashionable to say, but we're really doing it. We don't just give them cash, we actually teach their youngsters. We want to teach their youngsters. We set up workshops for the elders. They're not going to work for us. The elders are never going to work for us. But we want them to understand what's happening with the water on their land. We want them to understand what happens when a mine closes, what really should happen. What is the bond worth that's been doing it? So we want to educate the Indigenous people that are never going to work for us, but we want to do that. And we also do other things for them. We sort of mention that in the next one. And is the company working towards a greener future? Of course we are. We truly believe in mining, but it has to be done in a sustainable way and a socially acceptable way. And we're there. I like to, if any of you looked at the histories of the gold rushes and whatever, who made the money was the guys who sold the wheelbarrows and the shovels. We're the guys that sell the wheelbarrows and the shovels. They all need us in different ways. So thank you, guys.